We really appreciate everybody coming out. It's always good to see everybody out on a pretty sunny day like today in Omaha. It's a really good event. Appreciate all of our team that put today's events together. And Cassie and I are going to kind of work through wrapping up the next 45 minutes or so. We'll try to bounce through a bunch of stuff relatively quickly, but we wanted to share kind of what we think is the next opportunities that are kind of coming up for Metonic and for Apogee in both Omaha and surrounding communities. We threw a lot of stuff at you today. There's lots of data points, really great panels. Really appreciate the two panels that we had. We wanted to make sure this year that you all got to hear from the experts that we listen to. Cassie and I spend a lot of time, and all of our team does, with a lot of experts that are beyond just the folks that are in our building. And that certainly was representative of the panelists that were alongside of us, folks who work locally as well as nationally and in multiple of markets. I think there was one day I saw Scott and I happened to run into each other in Sioux Falls, and Scott was doing an appraisal, I think, in Sioux Falls, and then was going to Iowa, and then was ending the day back in Nebraska doing appraisals in all three communities. So these are folks that definitely know our hometown markets, but also know markets on a regional and national basis, and we like to follow those. Somebody asked in the second panel there about why innovation, and I think probably the simple answer to that is that it gets better results. And in your packets you've got there's a bunch of stuff that we've got in there. There's some cards and stuff that you might want to spend a little time on. I'm going to focus on a couple of those. This black one's probably the most important one. This black one talks about how Metonic's done thus far in 2022. And I'm only going to touch on a couple of them, but in 2022 so far we've exceeded our 2022 operating distribution plan by just about 22%. That's pretty impressive on the team's part. We really appreciate all of our folks that have made that happen. We've distributed $7 million in refinance proceeds so far. You heard Josh and Scott and others talk about where interest rates and things are at today. I think as a portfolio, we only have less than 5 properties that haven't been refinanced in the last probably 2 or 3 years. And so when we're thinking about our existing portfolio, I think the next line down says we've obtained an average interest rate on refinanced properties just in 2022 that's just over 4%. That's pretty impressive, and almost all of those loans are 10-year plus loans that are in place on the portfolio in total. And so we feel like we've really done a good job of positioning the portfolio for the long term. Our average occupancy is 96%, and so just so folks get what that if you're not in the industry, you might not get some of the language and some of the words we use and that kind of stuff. We underwrite to about 93% occupancy, and so the fact that our properties are averaging above that, and the market in total is averaging above that, I think that's impressive for not just the Omaha market, but all the markets in which Metonic is serving. And candidly, it's that way across the country, that occupancy on multifamily housing is really, really strong. We've averaged about a 7% increase in total income. And so that's rent, occupancy, rent growth, all of those things that have happened in there. Again, impressive for our portfolio, but that's happening nationwide. And I think that what we've heard today is that now is a really good time to be a multifamily investor and involved in multifamily, and we're certainly doing our part to continue that path. I think one of the important statistics is on this page to pay attention to is that we've grown net operating income by 6%. And so the reason I think that one's a particularly important one to look at is that one takes into account what's happening on the expense side of the equation. And so rents are up, income's up. Everybody's happy to talk about that. That's what you'll read about a lot in the media and whatnot. But the net operating income measure measures income minus expenses, and our expenses are also up. And so, the fact that we've managed that to a point where we're still growing net operating income by 6% is pretty impressive. When we're underwriting properties, we're typically looking at that being 2.5% or 3%. And so we're probably double that right now at a net operating income level. The expenses that are up, our labor costs are up just like they are in every business. Utility costs are up, taxes are up, insurance is up. And so we're fighting all of those battles. Our asset management team is doing that all the time. But I think we feel really good about the fact that we've been able to grow our revenues the way that we've been able to grow them and manage the expenses to the extent to which we've been able to do that. And then we've achieved an 8.2% average increase on new leases. And so with that, a lot of what Amanda talked to is that, we're not the guy that's going to, do a month-to-month lease and kick the person out 30 days later, but, we do need to take advantage of market forces when we can do that. And so, we've been pretty aggressive about raising rents when we've had the opportunity to do that on our portfolio, and hopefully everybody's seeing the benefit of that. The second one that I want to spend a little bit of time on, I'll nerd out here a little bit on this graphic that you're given. It's apartments under construction nationwide. And that's in your packet. There's a bunch of really good stuff that's in there. All of these markets that are listed on this page are really great markets. We've been in all of these markets. We've been in a lot more markets than just this. I think we probably look at more apartments than probably just about anybody does. And I promise I won't geek out on this too far, but if you took the markets that are here, so Nashville to Springfield, Missouri, and you drew a dotted line kind of between St. Louis and Sioux Falls, where Metonic is likely to spend our time in the coming couple of years is on the markets that are kind of Sioux Falls to Springfield, Missouri. And I'll give you a couple of quick reasons for that. The left side of that ledger I would define as more kind of short-term hold models, much more transaction-driven models, more IRR-driven. Markets that are really good, lots of smart people doing really good things there, but probably not where we see the opportunity today and where we think the opportunity is likely to be over the next few coming years. Where we see the opportunity is on the right side of that ledger. So again, markets like Sioux Falls, Des Moines, Omaha, Springfield, not always precisely those markets, but markets that kind of fit that characteristic. Those are markets that we see as being, good places for long duration hold periods, good places where you can drive an above average cash on cash return, markets that will be able to probably better weather the storm of interest rate and cap rate and changes along the way. And so that's likely where we're going to spend our time. And so when we think about where are we likely to spend our time thinking about buying properties, it's in those markets, and we're probably going to be looking for markets that have kind of that 100 to 2,000, that 200,000 population trend market type, where we can buy at a percentage of what the replacement cost would be. And so when we look at a market, there's lots of indicators we look at, but we feel like if we can buy a property for somewhere between 65 and 70% of its replacement cost, that's at least one indicator of opportunity that we look at in markets. We obviously look for markets that have good, strong, growing population opportunity. We look for places that have some value add opportunity, particularly on the rent side. And so sometimes in these smaller markets, you find places where properties are undermanaged, underappreciated from the standpoint of innovation, where we can add something to the project that makes rent growth or something different than it might otherwise be. And so we're looking for places where we can go rents 3 to 5%. But what you'll see in that list is that there's not very many of those markets. Probably the only one, even on the right side of the ledger, that fits that characteristic is probably Springfield, Missouri. Springfield's a market where we're in. We do a really good job in Springfield. We've had really good results in Springfield. And so when I look at markets to buy that fit that characteristic, Springfield would be the one that I would put on that side, and markets like that. And so I think what that probably means is that buying for us in the next couple of years, I think, is probably going to be hard to do in a way that would end up presenting our group and the folks that invest alongside of us with the returns that they've become accustomed to receiving from us, at least. And so then you ask yourself, well, where do you build at then? And I think that when you look at that list, you kind of end up in the in the same spot. You end up building in those same markets. We like those markets for that reason. But we're probably going to build in markets where we can build for less than we could buy, right? And so when you look at those markets, I think probably Sioux Falls, Des Moines, Omaha all kind of fit that characteristic, at least at present, where we think we can build 3-story walk-up kind of traditional product types at a level that's less than what we think it existing today would sell for. There's lots of nerd data I can get into around that proves my point around all of those things. I'm sure there's a couple of you in the room that would challenge me around that, but I promise I won't do that here. And so when you look at those markets, you're like, well, where are those, which of those 4 or 5 markets do you think is the strongest? Omaha, I think as we've heard today, Omaha scores really, really well. and it also happens to be our home market. And so if there's, the data I think really supports continuing to do things in Omaha that are on the build side for all of the reasons that you've heard this morning. I'm going to let Cassie talk for a second here about our oncoming offerings of development opportunities. But we think there's an awful lot to be proud of in Omaha, and there's lots of opportunity here. We've been very focused on the apartmenium development side. I'm going to steal Cassie's thunder here a minute. On the back side of that card, it tells you, I think Holly spoke to this earlier, like what the differential is in a typical Elkhorn, Gretna, Northwest Omaha starter home, the kind of estimated monthly payment and what our rent averages are right now or what our underwritten rent levels are on Capriana, Laura, and Sora, somewhere around $2,140 a unit. Right now at Ravello, we're averaging $2,263. So I think that shows that there's really strong market demand for the product that we've developed at Ravello, and we're certainly going to continue to do that. But we've also recognized a real, oncoming need for affordability, particularly in markets that are in the suburban areas. And so that's a part of our trio strategy is to do a little bit of both, to add apartmenium developments in markets where we're not presently at with that product type, but also to help try to solve some of the challenges that Omaha and our surrounding communities face around the affordable housing crunch and developing some products that look a lot more workforce housing as we go into the next couple of years. With that, I'm going to turn it over to Cassie. How did I do today?
You did great.
I think 13 minutes is all I took.
He had a timer up here, so he didn't ramble. So before we talk about the trio investment opportunity, I'm going to talk a little bit about our 5 existing ground-up developments that we currently have in construction at different phases of the life cycle. So last year at this time, we launched the apartmenium portfolio. There are 3 of those in and around the Omaha Metro. But before I get to those, I want to talk about Ravello Phase 2, which has been under construction for a little over a year, and Ascend on 75 in Bellevue, which also started in spring of 2021. So those 2 lease-up projects have, like I mentioned, have been under construction, and we have seen incredible demand for both the apartmenium product type and the apart-middle, or conventional 3-story walk-up type that we have in Bellevue. Very different consumers, very different areas of the Omaha Metro, but all with incredible demand. So Ravello Phase 2, with the help of Selden Company and our incredible asset management team, are leasing those apartmeniums for $200 more per month than what we originally underwrote in early 2021. So as you can see, and as you've heard from all the panelists, incredible demand, very little supply, and a need for that particular type of housing. We plan to finish that project towards the end of the year. So that will be coming out of lease up, and then that will open up some room and capacity for us to start our next group of investments in the trio. The Ascend on 75 project, again, great success in Bellevue. We have a current existing community called Latitude 41. That one leased up 6 months ahead of schedule and has now been completely stabilized and chock full at 97-98% since we opened it. And so we saw a demand for workforce housing in Bellevue. This one is located at Nebraska Drive and Childs Road, across from a brand new OPS elementary school. We have 2 buildings open. Of the 107 units that will be there, we are 65% leased, and we are averaging 8% more on a rental basis than what we originally projected. So it's going to be another great investment for all of our investors, another great addition to our portfolio, and we're really excited to see the success of these 2 lease-ups. So additionally, last year we launched the apartmenium portfolio. That is Vistera 72 in Papillion, Alora 168 in Gretna at 168th and 370, and then Capriana Homes, who we are partnered with Habitat for Humanity Omaha. These, over the past 12 months, we moved through entitlement, pre-development, pre-construction, and we broke ground on them in early summer. So those are on target with our mass grading, underground utilities. We have footings and foundations starting in Papillion. So we're really excited, and thanks to our construction partners, we have 3 different construction partners on those. We've seen great success in the very volatile pricing market, being able to lock good interest rates and being able to get into those GMP contracts and get materials ordered that have the really long lead times. So just wanted to give everyone a quick update on our 5 existing. So that brings us to the trio. And as the Apartminium portfolio starts their lease up next summer, we will be looking to start the trio investment portfolio, which contains 3 different sites across the Omaha Metro. And Jamie was so kind to put a graphic up there on the screen that shows the different locations of the sites in the Omaha Metro. Sorry, I've got my notes I've got to uncover here. So our first one is Sora Homes. It's the top bubble in Northwest Omaha, located at 132nd and State. This is a growing area of the city, as we've seen with Bennington, the new high school, Westview, that was just built at 156th and Ida, as well as the Deer Creek subdivision and golf course. We can attest to how beautiful and wonderful this place is because Kayla Beller lives in that subdivision, and she's very excited to have a project in her backyard. But we were super compelled with this 27-acre site as it allows for a diversification of product. So this site was master developed back in 2014, 2015, and it has utilities to the site, is shovel ready with multifamily zoning. And so we saw an opportunity to bring the first build for rent community, larger scale community, to Omaha. So we are going to be doing 43 single family build for rent homes on a portion of the site. On another lot, we'll be doing another 180 apartminiums, as well as there's an area in the northern portion of the site that is skinnier in nature, and because of site constraints, it was perfect for another Habitat for Humanity partnership. So we're looking to sell 16 lots to Habitat and have a mixed income community with a robust shared amenity, as well as these wonderful, great rental options between the build for rent and the apartminium. Next, I'm going to move a little southwest to Gretna. You will see on there the trails at Gretna. As Bob mentioned, we're working to thread the needle between the apartminium, which is a luxury top of market rent, and a more affordable professional workforce housing. And so we were presented with an opportunity from our partners at Access Commercial to purchase a 13-acre site within a master development called Gretna Landings. So within Gretna Landings, there's going to be an expansive set of commercial users, banks, big box retail, medical office, fast casual, car washes, because there's a car wash on every corner in the city of Omaha. But still, a lot of amenities and walkability for this 13-acre site, where we look to put 300 conventional apartment homes that will be luxury in nature for the professional workforce or families who are looking to send their children to the school district of Gretna. And this will again have a top-of-line amenity set with a clubhouse, smart home technology, EV charging for that sustainability component. And we're just really excited about the city of Gretna. Obviously, having an apartminium project under construction, this will be a different style of housing. So we think that they will complement each other really well. And then obviously with the number of schools that we have seen built and are continuing to build in the city of Gretna, we have no doubt that these apartment homes will be as successful as any other project that we've put in the ground. And last but not least, so you'll see the bubble to the south there in Springfield, Nebraska. We are really excited to partner with one of our investor partners who's here today, Greg, on an 11-acre site in the heart of Springfield. So this is located on Plattsview Road in between Highway 50 and 132nd. If anyone has spent any time down in Springfield, they know that it is a very untapped market and has a very, very high demand for housing and rental housing especially. So the city of Springfield, we have met with them on a couple different occasions now, and they have said what a great opportunity, as they get calls all the time for the need of housing, rental housing. The workforce who has built the tech giant Facebook data center and Amazon distribution center along Highway 50, they need housing for their construction workers and for their distribution center workers. And as well as the community has just built a brand new elementary school that's just south of this parcel. It opened in August, and families who are looking to bring their children to a smaller community need housing, so that transition housing. So we're really excited about building 200 apartment homes at this site. There obviously will be more growth in the city of Springfield, and if anyone's driven down Highway 50, it's a fast 15 minutes, kind of from the center of Omaha, 10, 15 minutes. So we see this as the next great growth opportunity for the Omaha Metro and beyond. And I'll just say again, we are very excited and compelled with our Apartminium brand. We think that fills a missing cohort, but there's also a need for the workforce, the professional workforce, to have something a bit more affordable. And so that's why we're looking at all of our different styles of innovation, partnering with Habitat for Humanity, doing a professional workforce product type, as well as our luxury brand, the Apartminium. Any questions on that?
Yeah, we probably have time to open it up to some questions that, a couple of things I might just kind of wrap up Cassie's presentation around is that, we heard a few things during the course of the day. I think, Amanda talked a little bit about if we're going to build and we need to build, why don't local people do that? We're trying to answer the bell. I mean, there's clearly a big need and a big demand for rental housing and housing of all shapes and sizes. Housing's on fire, Class A to Class C, and single family to multifamily. Interest rates are going to have some impact on that for sure, but there's demand, nonetheless, that is serious. And so, as Cassie and I and Adam and Trey and our other partners have sat and talked about that, well, I think we can, answer the bell to what our local community needs in order to make that work and deliver, the style and type of returns that our partners have become used to us delivering. And we think that that's the most appropriate way to do it at this point in time, and that's always what we're focused on is, from an investor view, where's the best places for us to be and what's the best things for us to be doing. And at the end of the day, that's what we're focused on, and we think that these present the best opportunity to do that. We do think each of these communities, does have some unique flavor to it, and so, we're amending our project types in order to accommodate that. And so, if folks look online at Ascend on 75, it's our development in Bellevue that's in lease up right now, way ahead of schedule, doing super well. I think that's kind of the flavor that will be the project that's called The Trails in the Grove is something kind of like that in terms of what it'll look like, 3-story walk up, very nice, but a much more achievable rent level for kind of that workforce, the housing group. And the build for rent thing is, Cassie and I have been in markets, kind of all over the country to look at that building style. What those are is they're single family homes that are built for rent in communities that sort of look like apartment communities, but they're single family homes. And so if you go to larger markets across the country, I think we've been in Reno, Phoenix, San Diego, Orange County, Fort Myers, Nashville, lots of communities looking at their build for rent product types. They're on fire, doing really, really well. We're going to bring that idea to Omaha for the first time in a smaller setting. We're going to pair it with our Apartminium brand idea because we think that ultimately is the best result and the best pairing up of that. But we feel really good about the opportunity, where the demand is at. Certainly there's going to be economic market factors that impact all of that we'll be paying attention to. Interest rates are certainly on people's minds, and they're on our minds too, and we'll be paying attention to all of that stuff as we work our way through. But we're really compelled where the opportunity is at right now. And so for those of you kind of keeping track at home, if you're like invested in like all of those development deals, I think just to kind of restate what Cassie said, Ravello and Ascend will be out of construction here towards the end of this year. As long as Alicia holds to her word, they'll be completely filled up and leased by the end of the year. And we'll be going forth to kind of stabilize those financings, in the next probably 6-9 months or so, following that period of time. Allura, Capriana, and Vistera will be, fully along the way in construction and probably in lease up by the time we would launch our very first one of these developments. Obviously, these developments take a long time to roll out. And so, for those of you, hopefully all of you that are thinking about investing in them, I would think of these mostly being your 23 and 24 investments as we're going forward. And we've got a handful of bankers in the room. We'll be coming and talking to you fairly soon. So we appreciate folks being here around all of those things. Again, we feel really good about Omaha as a market, as our home base. If we saw a better opportunity in a different market, we would go there. Right now, we're not seeing a better opportunity in one of our peer markets, which is why we're not there. And we've looked a lot. I mean, Cassie, Aiden, and team have looked at ground in Lincoln, Kansas City, various other places. And right now, we just think Omaha provides the best opportunity for us to, again, have the best results for everybody that's involved in the project. So with that, I think we've got time for a couple of questions. If anybody's got any, we're happy to take a stab at it.
Will you be taking new investors?
We will always be taking new investors. Josh will be standing in the back. Josh generally has like a standing 10 o'clock conference call with Trev on the latest of the coaching search at Nebraska, but we got him to stand in the back, and so yeah, we're happy to take new investors for sure. Always doing that.
Good question.
While you're going for updates, do you have any updates on Palm Springs apartment complex you're working on?
Yes. Yes. So good news. We have all of our city approvals for the design of the community. We have completed an 80% construction document set that is being submitted to the city for plan check this next week. We will be marching through loan due diligence. We've signed a term sheet and have ordered an appraisal. All of our third parties are either ordered or complete at this time. And we are still trudging forward to break ground in December or January of this year. So subscription agreements are going out in the next week or two as we close on the ground before the end of the month. And I think we'll probably look to be doing a capital call before the end of the month as well. So really great progress in California. We are rounding the bases, and I feel like we are dangerously close from, shoveling some sand, but we're really excited that we're probably about 4 or 5 months out.
Yeah, so that's a really unique project that Cassie and I have been working on. Our whole team has been working on for probably going on 2 years now. But it's an example of a market where we feel like we can build for less than we could buy in right now, and the demand for housing is really severe, and the barriers to entry are very, very high. And so we're really compelled with that opportunity and looking forward to get it going. I'm maybe not quite as optimistic as Cassie is in the timeline, but it'll be soon. It'll be fine. She keeps telling me we'll get the subscription packets and stuff out relatively soon to everybody. Any other questions? All right, one more.
Correct that the way it's portrayed is that it's all three is one subscription, like it's been done with
Yep. Yep. Good question. So the question is Trio one investment and you get the benefit of all three assets? Yes, that's the way that's designed. And Josh will be in touch with everybody with further information on that offering, as well as any existing assets that come our way over the next several months as we're thinking about acquisition opportunities as we wrap up 2022, or as we think about the investment opportunity that will be the trio that will roll out here over the next handful of months. Any other questions? All right, well, thanks everybody very, very much. Josh is in the back. Jenna told me to remind everybody there's lots of Metonic swag on the table in the back, so feel free to take a bunch of that stuff. Lots of really good information in your packets and elsewhere in the back of the room as you leave. Cassie and I and Adam and Trey and others will be happy to stick around for a few minutes if folks have any specific questions they want to ask about any of the existing assets or any of the other things that we're working on. We're happy to do that. Thanks again to all of our panelists. Really great job. We appreciate everybody being here. And please know that y'all mean an awful lot to us. We really appreciate your confidence in us and your willingness to continue along the way with us as we work through these rocky times. Our team is working very hard to make sure that we get the best possible results. And please know that we value what you do for us very much. Thank you.